Okay, so good morning for distinguished guests. So my name is Tuyet. I'm the audit partner, cum Deputy General Director of PwC Vietnam. So I have been with the firm for more than 15 years, and I have developed my expertise in auditing and accounting advice in IFRS for a wide range of the client. So it's my honor today to be invited by the AFA to this conference today. So actually my session is the last session this morning. So after my session, we will have a networking session. So my session will cover about the IFRS 13 fair value. So as you know that IFRS 13 was effective since 2013, more than almost 10 years already. However, there are still a lot of challenges and obstacles in implementation of the IFRS 13, especially for those countries that's newly adopted IFRS and for those countries that are going to implement the IFRS. So in my session, I will cover for the three areas. The first one, I will recap about the IFRS 13, about fair value. The second one, I will cover about those challenges in adoption of IFRS 13. And finally, I will share some of the practice scenario about the judgments involved in adoption of IFRS 13. So as you may know that among the more than 40 IFRS and IAS, IFRS 13 is considered as a fundamental standard. So most of the companies will apply this standard. So let's move on for the first session about the IFRS 13 recap. The question that I commonly receive from the company is, what is the fair value? Is the fair value really fair? So as you might know that to answer this question, it needs a lot of effort from all the parties, from the governments, the company, the professionals, and all of us here. So for the fair value, you know that this is the price that the company they can receive when they sell a product, or an amount of money that they need to pay to transfer for the liabilities. So for the fair value, there are three approaches to measure the fair value. The first one is a market approach, which is the price that you can receive and listed in the market. For example, when a company investment in a stock listed in the stock exchange, so the fair value of that stock will be the listed price in the stock exchange, which is called market approach. So market approach is considered is the most reliable approach compared with the others. The second approach is about a cost approach, which is the cost, the price that you pay to replace or purchase a new asset. So the cost approach, for example, you have a machinery and equipment. If you want to fair value of machinery and equipment by the cost approach, you can use the purchase of the similar assets with the similar features. And you can minus for the accumulated depreciation based on the original historical cost when you acquire that. And the final approach is an income approach. Income approach is considered the less reliable approach as compared with market approach. So for the income approach is considered the current value of the discounted cash flow amount. For example, when you have an investment property, buildings, if you want to fair value the buildings, you can calculate the net value, the present values of the future cash flow generated by that building. This is the income approach. Let's move on for the fair value hierarchy. So under the IFRS 13, it's divided into the three levels of fair value. The reason why they need to divide it into the three levels, because you know that the first level will be the most reliable approach. So, and IFRS 13 require you to disclose the level of the fair value on the financial statement and the assumption that you use to measure the fair value. So based on this chart, you will answer the question to classify the value of the level of fair value. Whether the quoted price for identical assets is and liability, the price if it quoted in the market. So is it considered as a level 1, the most reliable level in the fair value? And if the answer is no, we will ask the second question, whether valuation techniques with no significant unobservable inputs. If the answer is yes, the level will be number 2. And if the no, the level will be number 3. Let me give you a simple example for the level 1. Like I mentioned before, for the listed stock in the stock market exchange. So when you obtain the price, the listed price of that securities is considered as a level 1. For the level 2, for example, a company when they issue bonds, if the bonds is not traded in the market, you need to obtain some of the interest rate in the market. This is considered like a comparable rate. So in that case, it will fall into the level 2. And in the level 3, normally when you use the income approach, like I mentioned before about the investment properties, when you use the discounted cash flow approach, it will fall into the level 3. So this slide just like summarize on the 3 levels. Next slide, please. And the final thing I would like to recap is about the fair value at initial recognition. Sometimes in the initial recognition, when the transaction price different with the fair value, you need to calculate the difference, and that difference will be reflected to the profit and loss. For example, like when you acquire a land, which amount of like $1 million US, you need to pay $1 million US. However, when you fair value, it is like measured at 1.2 million. So the difference of 0.2 million US, you need to take into account and record it to the income statement. So those are the key points I would like to have a recap on the IFRS 13. So let's move on to the second part about the challenges in adoption of IFRS 13. As I mentioned previously, this standard already issued for 10 years. However, a lot of like challenges when apply this standard. So I would like to highlight for those challenges, and especially in Vietnam. The first one is about the gap differences between the international valuation standard and local like valuation standards. So according to like IFRS, there's no like guidance whether you use the international standard or the local standard valuation. So I understand that in some countries like in Vietnam, the difference between the international standard and Vietnamese valuation standard when you use to measure the fair value. Because of there's no guidance, so some companies in Vietnam, they might like apply inconsistently. Some companies, they might apply the international standard, but some other will use the local standards. So at that time, there are the challenges for the companies. So from outside, we will recommend the company to apply the international standard and the international practice, which is more like transparent. So that is the first challenges when we apply the valuation. We need to define which standard that we use to apply and calculate the fair value for IFRS 13. The second challenge is about there's a limited about the statistics or ranking of valuers in the country. So you know that by 2020 in Vietnam, there are more than 400 valuers company in Vietnam. However, after that, after 2 years in 2022, there are only like less than 300 valuation companies. The reason I understand is because the government, they review and monitor the quality of the valuation company, and the number of the valuation company that is not qualified was reduced. So amongst those like valuation company, is very confused for the company whether which valuation company they should engage to support them with the valuation. So in this case, we recommend that the company, our clients should use those like valuation company, which is classified as like top tier or the second tier, so as you can obtain a more reliable report and measurement in terms of the fair value. And the third one is about the the approach, whether you use the in-house team for the valuation or you use the third party, you outsource your valuation. So each option has the advantages and disadvantages. So when you develop your in-house team for the valuation, there's some advantages. For example, like the in-house team, they understand the strategy of the leadership, they understand the nature of your company, so they can easily develop approach to measure the fair value, which is like very quick and align with the strategy of the management of the company. And also about the cost. Normally the cost will be more saving compared with the outsource for the valuation. And also about the confidentiality. If you want to keep the information confidential, you can use your in-house team to develop for the valuation. In the other hand, for the in-house team have some like disadvantage. For example, like your team may not be well equipped with the sufficient experience and expertise in certain industry. And also, if you don't engage for the independent party, your report might be less transparent, and you don't have another view to help you to review your view. So, according to the standard, there is no guidance or requirement that you have to use in-house or outsource the valuation team. However, based on my experience, it depends on the company. Based on the practice, you can either use your in-house team or you can like outsource to a third party. So whether use the in-house or outsource the valuation team, it depends on the nature and the size, also the capability of your business. The fourth one is about for the small and medium entities may face the barrier when selecting the valuer to measure the fair value. As you know that for the SME company, resources and cost might be the challenges in the valuation. So for those SME, it is very hard for them to develop an in-house team or either outsource the valuation. So in this case, we recommend that you should like find the like simple approach for the valuation. So in PwC, we develop a tool. It is called like evaluation, which is like can apply for the SME company. And the next one is about the index inputs and assumption might not be like published or representative for the market. As I mentioned, there's some approach for the fair valuation. For example, like for the market approach and for the level 1, you need to obtain the information which is like available in the market and observable. However, it's not always easy for you to find the information in the market. So it is a challenge for the company to do the fair value measurement. So in that case, for example, like I can give you a simple example in the agriculture industry. For example, a company they plant a soya bean, right? So to find a soya bean index in the market is not always available. So at that time, the company need to build the alternative approach to fair value for the soya bean plant. For example, like you can use the like for example like the cost plus approach to replace for the information not available in the market. Next one is the entities may have limited access to information of the asset or liabilities when measuring the fair value. For example, like when you invest in a subsidiary, associates, or in an investment, but however, the ownership or the control that the company invests in the investee is limited, for example, like 20% or like 10%. So in that time, if you want to fair value the investment in those entities, it is very hard for you to obtain the sufficient financial information of that entities. So in that case, we recommend that the company need to disclose clearly in the financial statement that you cannot find the fair value, cannot measure the fair value of that entities. And in the other hand, we recommend the entity to build and enhance the collaboration with the investee for the future. You can obtain the sufficient and adequate information for the fair value. And finally, for the fair value measurement, it involves a lot of judgment in the measurement. It is very subjective and very judgmental. So in my last session, I will give you guide you through some of the practical scenario which involve deeply about the judgment. Okay, so for the first scenario, the next slide, please. It's about the complexity and high uncertainty in the estimation of the future cash flow. So, for example, when a company, they use the income approach, which is the present value of the discounted cash flow approach, you need to obtain a lot of like input and a lot of assumption. For example, like you need to obtain the estimation, a forecast about the future revenue of the company and also the cost related. So in order to do that, you need to have a lot of assumption and information here. For example, the growth of the industry, of the country, of the world, the growth of the company themselves, and also about the strategy and about the plan of the company in the market. And also you need to obtain information about the discount rate. The discount rate is a very judgmental information that you need to calculate it, and you need to a lot of assumption involved. And also you know that to establish and to forecast for the future revenue of a company for a period, for example, like 5 or 10 years, a lot of uncertainty information there. Normally the company will develop the 3 scenarios, the best case, the worst case, and the medium case. So in that case, we recommend the company to calculate the average scenario comes from the three cases. And also we recommend the company to like enhance the quality and the capabilities of the in-house team, or the company can like get the support from the advisory company to help the company with the valuation to reduce the uncertainty and reduce the judgment, and which is like more like objective. So for the second case study, it's about the time and cost of the valuation report. So in the practice, normally for the year end, some of the company, they might find a challenge about a deadline to prepare the IFRS financial statement. And normally they just have few months to complete the valuation report, which is very tight for those scenarios which involve a lot of like assumption, judgment, and calculation. For example, like for the year in 2022, normally the company only have like just few months, 3 or 4 months. It depends on the policy of the company. So in that 2 or 3 months, it is very tough for the valuation team to complete the valuation report. So we recommend the company can like utilize the report of like 2021 and update with assumption and market adjustment to come up with the report of the 2022 rather than wait until the year end. So you can do the like interim or the mid-year like calculation of the valuation report. The next one, number 3, is about the market determined price are not published in the measurement of fair value of biological assets. So, you know, ASEAN countries, we like invest a lot in the agricultures. So IAS 41 about the agriculture have some guidance about the measurement, the fair value for biological assets. However, the information is not always available in the market for you to measure the biological assets. For example, like a company, they have they feed and raise a pig. So they will have the 2 types of like assets here, which is called like bearer animals and consumables. So for the bearer animal, it's quite challenging to obtain the information in the markets, the index about the pig in the company, for example, like that. So it is very tough for the company to fair value the bearer animals. So at that time, normally the company will like use the method of like fair value less cost, less accumulated depreciation and impairment losses. The next one, the number 4, about the legal matters of land use right. So in Vietnam, the land is not like owned by individual. It's owned by the whole individual or the whole country. And in Vietnam, individual is not allowed to own a land. Individual and the company is just own the land use right. So, so in the form of the land use right, there are a lot of kind of the form of the land use right. For example, like it could be a kind of like the government, they grant the land to the company for free, or they grant the land to the company with a discount price, or they grant the land to the company with a fair the arm's length price in the market. So, and also have the government, they can grant the land to an industrial zone, and industrial zone will lease to the end customer. So a lot of form of the land use rights in Vietnam. So it's very challenging for the company when they classify the form of land use right in a proper accounting standard. The land use right could be found in the accounting standard like IAS 16 on PPE, IAS 38 on intangible assets, or IFRS 16 on lease, or IAS 20 on the grant. For example, like if the government they grant a land to a company with a discounted price, it will be the hybrid assets. It will fall into both standard, which is like IAS 20 about the grant and IFRS 16 about the lease. So it is very judgmental here. So we need to review the land use right and the contract of land rental very carefully to classify the land in the proper accounting standard. And the final case is about the land rental payment is adjusted periodically, and we need to fair value the land. So you know that in some land rental contract, maybe the company can sign a contract with the government for like 40 years. However, the price could be adjusted every 5 years. So the price is not fixed. So it's also a challenge for the company to fair value and estimate the lease liabilities for the whole like lease term contract. And also like for some like land area, it's very challenging to find available information in the market. It's especially for those land located in a like remote area. There's no available information. And also for the state-owned company in Vietnam, when they own the lands, and it's very, very tough for the company to measure the fair value because there's not clear guidance from the government and about the policy holders how to measure the state-owned land. And one more thing, the land belongs to the state-owned. After it is measured, for example, it is subject to the measurement by a valuer, independent valuer. But later on, the government, they still have like another supervision body to review the fair value of the valuation. So a lot of challenges to the valuation company when they do the valuation for the land belong to the state-owned enterprise. So those are my highlights about those cases subject to a lot of like subjectivity and judgment when we do the fair value measurement. Okay, so I finish my session here and hope that you can like receive the meaningful information. And once again, thank you on the organizer for inviting me to as a speaker in the conference today. And once again, thank you. And I hope that you all will have like a very like great day ahead, and wish you have a nice like networking during the lunch. Thank you.